Welcome back. We're ready for a discussion on some of the proposals that President Trump has had to address affordability, including a potential 10% cap on credit card interest rates. And for this conversation, we're joined by Brendan Pedersen, who's a financial services reporter for Punchbowl News. Welcome to Washington Journal.
Thank you for having me, Kim.
And so, the president did say that, he wanted to address credit card debt. I want to give you some numbers on that, which you're probably familiar with. Credit card debt in the United States exceeds $1.21 trillion. Average interest rate is at 22%. The average credit card debt per American was over $6,000, $6,523 per American in 2025. 37% of adults carry a balance on their credit cards. So talk about this proposal from the president, what we know about it, and how it might affect those numbers.
Yeah, the proposal, what you see is what you get. The president came out and announced, I want to say last Friday, that he wants to see credit card interest rates capped at 10%. The White House has gotten a lot of follow-up questions about this proposal. For example, like, do you need legislation? The answer is almost certainly yes. When I've heard Caroline Levitt talk about this proposal, I've heard her say, like, well, we're expecting the credit card companies to come out with products like this. And we've seen some marketing pushes along these lines. There has been, I think the company Built was like, oh yeah, 10% credit card, no problem. That is an introductory rate, and it will eventually go up to something closer to 30% APR. So you're hearing noise about the president's proposal, but very little action happening so far.
What would it actually take, though, to implement something like this in terms of what goes into credit card rates and what it would take to lower them?
Right. Well, again, it would certainly take an act of Congress at this point to institute some kind of larger cap. And right now, leaders on the Hill, mostly Republicans, are saying, maybe not, right? There is some interest on Capitol Hill in changing some things about credit cards. But when you're thinking about a 10% cap, when the rates are, like you said, closer to 22%, that is a pretty big intervention in credit card markets. Now, I would not tell you that it's impossible to economically pull that off. There's data out of Vanderbilt's, their policy accelerator, that has found that maybe a 15% credit card rate would be a cap, I should say, would be manageable without the kinds of hair on fire risks that bankers will tell you there are as soon as you start talking about any kind of government price cap, price controls, right? In theory, the bankers will tell you, once we start talking about credit card interest caps, the availability of credit goes down, which means that fewer people with worse credit scores are not going to be able to use that credit card. And having a credit card is like a nice financial tool to have in your tool bag. No one would dispute that. But it's definitely on the margins that you can make changes. I think talking about a 10% cap, that's a pretty serious intervention. But above it, you can look on the margins and say, yeah, this is probably doable if there's political will for it, which, based on my conversations with lawmakers right now, isn't exactly there yet.
And there have been a couple of ideas floated in Congress to address credit card swipe fees, to address interest rates. You had a post on X just about that President Donald Trump appears to endorse the Credit Card Competition Act and gives an attaboy to Senator Roger Marshall. The banks will not like this one bit. President Trump said on Truth Social, everyone should support great Republican Senator Roger Marshall's Credit Card Competition Act in order to stop the out-of-control swipe fee ripoff. Roger is a fantastic senator. What would this legislation do, and what other legislation may be in the works that might address credit cards in particular?
Yeah. The Credit Card Competition Act is a bill that is led by Senator Dick Durbin of Illinois and Roger Marshall of Kansas. It is probably the single most lobbied about bill as far as the banking sector is concerned over the last several years. It's a swipe fee reform bill. In the United States, swipe fees are pretty high, especially relative to our friends in Europe. The average swipe fee, which I should explain, when you swipe your card or use a credit card in a transaction at a retailer, the retailer is paying a certain percentage fee to process that transaction with the credit card company, with that bank. In this case, in this country, it is about 2%, a little up, a little down, depending on the merchant. In Europe, it's capped at 0.2%. So a lot of retailers for a lot of years have been complaining about just how much they are spending in swipe fees. Those prices, in theory, are passed along to customers, right? If you've been to a mom and pop store in the last several years, you've probably seen taped up front on the register saying, credit card expenses 4% charge, right? They are trying to cover that margin. That is a case where consumers are directly paying for that swipe fee. What Roger Marshall and Dick Durbin have been trying to do for the last couple of years now is say, okay, we're not doing price caps. This is not a like we're bringing a ceiling into swipe fees. They want to introduce a requirement that credit card companies actually offer a cheaper payment processor in the matter of actually payment transactions. Because right now, the credit card market is largely dominated by two big companies, Visa and Mastercard. They move their prices in tandem. You can dispute whether it is a duopoly, but it certainly has the qualities of like kind of a cartel. And what they are arguing, Marshall and Durbin, is that if you just make the companies offer a cheaper company, prices could go down on swipe fees. Let's get some actual economic competition in there. Banks hate this for a lot of reasons, and they'll say, look, Visa and MasterCard, we make a lot of money off this, but we also make our payment rails more secure, and we offer these great credit card rewards. Don't you like your credit card rewards? It'd be a shame if something happened to your credit card rewards. They love to say that. At the end of the day, this is a economic intervention.
Credit card rewards, which we should say are paid for by those swipe fees, by the interest paid by folks who don't pay off their cards every month, et cetera.
Exactly. Right. Like that is the transaction, the exchange that people get. And I think some people they look at credit card rewards, some of which can be very lucrative, sometimes more marginal, and people wonder, like, where's this money actually coming from? You're exactly right. It's swipe fees, and it is interest paid by the people who are not paying that maximum balance every single month, right? That's the exchange. That is the deal that we have made between banks, consumers, credit cards, and retailers. It can change.